Thanks so much for tuning in to Talking Point. I'm your host, Neeraj Shah. The Talking Point today are the views of Mr. Manish Bhatnagar of SKF. He heads the company, and they came out with arguably a fairly strong set of numbers. But the conversation with Manish will as much be about SKF and its performance as it'll be about how does he see the macro situation on the Capex front and what is um, his crystal ball telling him if it does. Manish, great having you. Thanks for joining in. Hope all is well.
Thank you, Neeraj. Yes, appreciate it.
The pleasure is ours. Manish, let's start off with SKF's performance. Revenues about a sequential 2% growth, driven largely by, I thought, double digit that increase that you saw in the automotive OEM. Replacement wasn't quite that high. How did you think of the quarterly revenue performance?
Yeah, the 2% sequential may seem okay. That's not a great number, but you have to look at last quarter was also a fantastic quarter, and we're really, the year's performance so far. Even if you look at year on year, we're looking at 25-30% growth coming off last year. So I think the worst is behind us for sure. Automotive certainly was a laggard for the last few months. We see a pickup now happening in automotive. Industrial, which is also a very large part of our business, more than half our business is industrial, has been performing really strongly. The order book looks strong. Capex, we'll talk about in a few minutes, is looking pretty good. So, in general, Neeraj, I'm very pleased with our performance last quarter, and hopefully, we'll see that traction continuing for as long as we can see forward.
Okay. Are client conversations looking at strong, Manish? The reason I ask is because 2 quarters ago, where things to the street were looking very hunky dory, or 3 quarters ago maybe, you had raised this flag of caution that while it looks good right now, you are monitoring a few things and client conversations to get a sense of what will lie ahead. How is that anecdotal evidence looking right now?
You know, um, I'm I'm cautiously pessimistic, and that's a different word to say I'm cautiously optimistic. Now, only because we know what's happening in the world around us. We may like to think India is decoupled and nothing which happens outside India will impact us, but of course that's not true. Whether it's demand or whether it's global supply chains or sometimes even talent, we are not immune to what's happening around us. And therefore, I think at some point in the future, we will start seeing a slowdown. That winter is going to come sometime. Now, whether it comes in December or comes in April, I don't know.
Mhm.
And I think as our job, frankly, Neeraj, is to prepare for that winter so we are not caught off guard when it does arrive. Specifically to your question on client conversations, many clients that I speak to, in fact, I spoke to a large cement customer 2 days ago, and they are also seeing some signs of a slowdown. Inflation is where it is. We are seeing some discretionary spend starting to taper off. But having said that, inflation results came out like this Monday. I believe they came out for the first time. CPI had dropped below 7% in
Mhm.
3 months. Now it's only 3 months data, so we'll see how it plays out. But it's I'm cautiously pessimistic. I hope I'm proved wrong because I love to always go out and show strong numbers. But we have to prepare for the winter if and when it arrives.
Okay. Okay. So yeah, I brought it more first from an SKF perspective, and I'll get done with that, and then I'll move on to the broader macro and what do the client conversations imply for that. But sticking to SKF, so therefore, for now, clients may have sounded cautious, but I reckon that it may not immediately show in the spend. So okay, let me rephrase my question, Manish. After a 2% sequential increase and after a very strong quarter one, how has quarter three been like? Typically, the festive season puts a brake on maybe the industrial activity and puts the headlights on in the consumer side. What's been your experience for the first 45 days of the current quarter?
It's actually been surprisingly strong.
Okay.
And you're right. Normal rationale or normal logic would say what you just said. But so far, it's been very strong. Now, you could argue it's pent-up demand. You could argue it's easing of restrictions, whatever might be the reason. It's looking fairly strong, and I think this current quarter should be as good as the last couple of quarters. Going forward is something that we have to be a little bit careful about. But this quarter, so far so good.
Hmm. A question on a segment which is the railways segment, Manish. The conversations with the companies which have gotten some orders for wagons, so on and so forth, are fairly buoyant. I wouldn't. Okay, let me use the term buoyant because they are buoyant. Those guys are probably getting orders after a really long time. Maybe they are extremely bullish about what lies ahead, and some of them also mentioned the possibilities of India being able to export. So my question to you, the railway parts, I mean, we know that defense is on a bit of an upswing as well. So tell us, how is that aspect going to do? Because I'll tell you why. I read a Kotak note, Kotak Securities, which apparently tracks your company very closely. They say that the share of railways in your overall pie will increase quite substantially over the course of the next 3 years. So tell us about this.
I haven't read the Kotak notes. I don't know what they say in that, but I should certainly go back and refer to that. But before I answer the question, you have to also understand, Neeraj, that we are a very, very well diversified company.
Yes.
So nothing in our portfolio is more than 7 or 8% of total. So even when the note says it will increase significantly, the 7 odd percent will not become 70%.
Hmm.
7 will become 8 or 9, etc. So the materiality of that increase is certainly important, but it does not cause a step jump in the way we perform. And I think we want to keep it that way. We like it that way because one quarter railways goes up, one quarter wind goes up, one quarter defense goes up, etc. It helps us manage the cyclicality a little bit better. Specifically on railways, you're absolutely right. The wagon builders and railways, has three components to it. It's not just the wagon builders. It's the locomotives, it's the wagon builders, it's the passenger coach vehicle, etc. If you're talking of wagons specifically, I assume you mean freight wagons. And freight wagons, yes, very, very buoyant. We are seeing orders placed after, like you rightly said, after a long time. And if I remember correctly, I think 90,000 wagons have been tendered and awarded, which is a lot. And it's over a 3-year period. Given that our total wagon stock in the country is about 300,000. So 300,000 wagons are running across the country over the last 70 odd years, and you jump that by 90,000 more in 3 years. Now that's a pretty big jump of wagons. So yes, if I was a wagon builder, I would be very, very pleased and very buoyant. And this, of course, translates into people like us because those wagons cannot run without bearings. And those bearings, of course, we hope will all come from SKF. So, and that is where we are also betting on the new wagon builds. And we've just got our new bearings, what we call Class K bearings, the higher load bearings, just been approved for those new builds. So as those new builds happen and they get rolled out, we hope they will all go out with SKF bearings.
Okay. Okay, so that's as far as the revenue piece goes. I can go on, but we have paucity of time, of course. So let me move on to the margin front. And it was astounding to see, or it was a pleasant surprise to see the gross margin performance being so good. How did you manage that?
Well, you and maybe we spoke about it last time. Maybe you did not. So I can't remember. But about 6 months back, we rolled out a new strategic framework for SKF globally, and of course, we've cascaded that into India. And that framework has been built around two themes: clean and intelligent. And what this means is that, in simple words, clean is, and you may not know this, Neeraj, but it's an interesting fact. 20% of the world's energy is used in reducing friction. Think about that. And, and we are at the forefront, our products are at the forefront with its bearing or lubrication in minimizing friction. So what we do as an outsized role to play in reducing energy consumption in the world. And that's what we mean by clean. If we can make our bearings more efficient, if we can make them better, perform more effectively. We help in reducing energy consumption in the world. And therefore, that's kind of one of our new strategic planks, if you will. The other one is intelligent. Bearings are no longer steel pieces running around, rotating around in a piece of equipment. Customers now want to know how is the bearing performing or how is the machine performing, whether it's uptime or whether it's MTBF or whether it's maintenance or failure, whatever metrics are important to them. That's intelligent. So we want to have intelligent bearings and no longer just steel bearings floating around. So clean and intelligent is our new strategic framework. And that is what we've cascaded down with a lot of rigor over the last 6 months. The margin improvements you see they're talking about is also around making strategic choices on where we will play, specifically in higher margin categories, because strategy is also about knowing where not to play.
Mm-hmm.
And some segments we are okay by saying, okay, we will not put more resources in it. Of course, we'll service customers, but we will not invest more in those segments unless they become margin accretive. So that's kind of our philosophy going forward, and that's played out actually really, really well in the last 6 odd months. And that's where you see our margin improvements. And the second thing I'll say is around costs. When I talked earlier about the winter coming, and we have to prepare for that winter, we cannot prepare for the winter when suddenly it's snowing outside. We have to prepare for it 6 months in advance. And that means managing our costs so much better. These costs could be, of course, the standard S&A costs, but also in terms of improving regionalization of sourcing, of technology, making sure we work with our suppliers, a number of things. So yeah, managing costs, focusing on more margin accretive segments is what I think is driving our margins in the right direction.
And you reckon this can continue? EBITDA margins, can they expand from where they are currently?
I'm always warned not to give guidance, so I will not do that here. But yes, I think our margins will remain strong going forward.
Okay. What now, Manish? What about Capex in India? Government-led Capex is strong. Private Capex is selective, if you will. What, at least to our minds, you have a peak, as you said the last time, a peek into India Inc.'s plans, because you look at their factories when they're getting built or announced or thought of. How do you see the Capex momentum in India? Private, that is.
Yes, so private Capex, I was certainly much more bullish 6 months ago. With government Capex, no questions. It's moving ahead, very strong. And let's also not discount government Capex. Government Capex, frankly, is the big part of our Capex, and it drives a lot of investments and a lot of spends, and that's beneficial for the industry. But that's in a very nice place right now. Private Capex, you're right. Selectively, companies remain strong, but selectively, some companies or some industries, I mentioned the cement folks, I spoke to a cement CEO 2 days ago, and that's one segment which has become cautiously pessimistic on Capex going forward. And again, I only said cautiously pessimistic, it doesn't mean it's going down. They still have those plans, they still have those orders out there. But I want to wait and see a couple of months more to see how this whole, we talk of recession in the US, recession in Europe, etc. How all this plays out, because we are not immune. So things have changed a lot in the last 6 months, Neeraj, what's happening in the world economy. So private Capex remains bullish, but maybe a bit more cautious than it was 6 months ago.
Okay. And I would also love to understand in the mix of Capex, be it government or private, what is the quantum of, what is the inflation factor here, and what is the real Capex? Any thoughts there?
Well, inflation, like I mentioned, we are seeing some tapering of inflation happening now, and inflation sometimes is a very high level word. It really means very different things for different people. You can talk of retail inflation, CPI, wholesale, etc., etc. I think what's really worrying some of our customers is inflation on supply, inflation on metals, inflation on commodities, because that has a true impact on production costs. So that's one. The second one, which is also worrying a little bit, is around wage inflation.
Sure.
because that also is, India is no longer the the low cost country it was 4 5 years ago across segments. Of course, technology and IT and all that makes the headlines, but across segments, wage inflation is becoming reasonably high. We're looking at 10%, 12%, 15% wage inflation. So a combination of inflationary trends is one of the reasons why companies are being a little bit cautious about capex now, because those capex calculations, the
Sure.
returns take into account also, like you said, inflation and margins and the future outlook, etc. So yeah, those are certainly things playing on people's minds.
Hmm. No, what I also meant to try and understand from you, Manish, is out of the capex that is being announced as an absolute number, how much of it is a an uptick in volumes versus how much of it could be merely not volume driven but price led because prices have gotten inflated.
I get it. Okay, I understand the question better now. No, I would think most of the capex announcements is linked to what?
Oh, okay.
It's not necessarily a price mix effect. That's a small part of it, but not really. It's most of it is volume, and that is what is important, and
Yeah.
that's what drives the economy forward.
Okay, that's great news. Music to the ears. One final question, Manish. Are you watching out for macro indicators like, you know, possible extension or non-extension of the free food scheme post December 2022? Because if that is not extended, the larger belief is that that amount will come into government capex ahead of the 2024 election. So, money is finite; it can be used in X or Y. There are a lot of people who are trying to kind of, juxtapose X against Y, A versus B. Are you watching out for some of these indicators? And if so, which are the ones that you watch out for the most?
Yeah, all these indicators are important. 24 election is not very far away. It's about a couple of years away, the elections. I think a lot will happen between now and then, in the next 24 months. So yes, we hear of all these subsidy schemes and popular schemes and everything else. But I think this government is very firmly of the view, at least the folks I speak to in the government, that they have to drive capex forward because they understand really the big. If I was in the government sector, and I'm not, but if I was in the government sector, I think the big question in people's minds in the government is around jobs creation.
Mm-hmm.
And they understand that that may be the big election plank 2 years out and not necessarily some subsidy schemes. And to drive that jobs creation, capex is a very, very important part. So I don't think the government will minimize capex in favor of some subsidy schemes, if that was a question. And I think
Sure.
capex will move forward because only capex that you invest now will lead to creation of jobs, the lag effect, 12 months, 18 months down the line. And that, if I was in the government, that's a perfect time for elections.
That's
So I don't
true.
think capex will taper off anytime soon.
Well, that's actually good news from anybody who's watching the economy or from a markets perspective as well. India is being touted as the next capex story or the current capex story moving on. Let's hope that continues. Manish, it's always amazing insights from you. That 20% of energy being used to reduce friction was the highlight for me this time around. Thank you so much for joining us today and speaking to us.
Thank you, Neeraj. You take care now. Bye bye.
And viewers, thanks for tuning in.